Hi, I'm Wal Galbraith. I'm a part of the Ray White South Coast Group, and this is your South Coast Snapshot for week 43, 2023. The Snapshot is designed to give you a bite-sized breakdown of the real estate market overall, including local, regional and city-based information across Australia. All information is sourced from the AFR, leading economist on X, and the Sydney Morning Herald. All information is relevant to buyers, property owners or both. 3 years ago, you could get a 3-year fixed mortgage from Big Four Australian bank for a tick over 2%. Now you'd be looking at about 6.5% at best. The difference on a 30-year mortgage, no matter whether you're repaying $500,000 or $1 million, or much more or less, is an extra 70% per month. Growing difficulty entering the housing market has led to the most first home buyers tapping into the federal government's Home Guarantee Scheme since its inception 4 years ago, according to the National Housing Finance and Investment Corporation. The scheme, which offers 3 types of guarantees, allows first home buyers to purchase a home with a minimum deposit of 5% to avoid paying mortgage lenders insurance. The remaining amount for a 20% deposit, which is required to be exempt from paying the insurance, is guaranteed by the federal government. The number of first home buyers who used the scheme increased to 45,000 for the 2023 financial year, according to NFHIC's 4th Annual Trend and Insights Report. According to NHFIC estimates, buyers would be forced to delay their home purchase by an average of 5 years to save the entire 20% deposit if they had not had access to the scheme. Australians devote a greater share of their income to mortgage repayments than any other advanced economy, the IMF has revealed, as it downgraded its forecast for the local economy and warned inflation will be higher than previously thought. In its latest World Economic Outlook, the IMF said the chances of a hard landing for the global economy had receded as the world remained on track for a soft landing scenario where inflation returned to central bank targets without a major downturn in activity. In a new analysis revealed on Tuesday, the IMF showed that debt servicing ratios had increased sharply in economies like Australia, where the majority of households had variable rate mortgages. Developers targeting the fast-growing build-to-rent sector must create sustainable buildings that will hold their value over the next 40 years, or they will be left with stranded stock such as older office buildings that struggle to find tenants in the current market, a new report says. The professionally managed rental sector accounts for just 0.2% of Australia's housing stock, or 23,000 homes in use or development, and could grow to 350,000 over the next 5 to 7 years, requiring homes to hold their value for decades, the report by developer and investor model warns. The exaggerated fixed-rate mortgage cliff has turned out to be a manageable staircase for borrowers, graduating from super cheap fixed loan rates of about 2% to variable mortgage rates of 6% or so. While there is undoubtedly a painful financial squeeze on a subset of borrowers, there is little evidence to suggest monetary policy is biting households in aggregate too hard. Banks issued about $400 billion of fixed-rate mortgages in 2020 and 2021. The stock of housing credit outstanding with fixed-rate loans almost doubled to 40%, and the flow of fixed-rate loans is now even higher. Now, about half of the loans by value have rolled onto higher interest rates, with the vast majority of borrowers opting for variable rate loans. The peak of the roll-off passed in June and September quarters. Most of the remaining cheap fixed-rate loans will expire over the next 12 months. The majority of current fixed-rate borrowers are estimated to have sufficient income to continue meeting their obligations after moving onto higher mortgage payments, the RBA notes. The already record share of income households spend on mortgage repayments will increase even further, the Reserve Bank has warned, causing borrowers to dip into savings to meet the rising cost of living. Surging home loan repayments were successfully reducing household spending and helping the central bank get inflation back onto target, Chris Kent, the RBA's Assistant Governor for Financial Markets, said in a speech on Wednesday. But Dr. Kent said the RBA would likely respond to any evidence that inflation was not on track to return to the central bank's 2 to 3% target by December 2025 with another interest rate rise. Looking to make the best use of the current market or considering your financial options? If you're either expanding your property portfolio, refinancing, or looking to sell your current property, get in touch today. We'd love to help. I'm Wal Galbraith with the Ray White South Coast Group, and that was your South Coast Snapshot for week 43, 2023. See you next week. Be well.